How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group and RetireSharp.com. Today's topic I want to discuss with you guys secondary market annuities, kind of what is it and how you could obtain the cheapest or the best, with the highest guaranteed secondary market annuities out there currently in the marketplace, by kind of leveraging my company and kind of showing you why I do things a little bit more differently. But first and foremost, what exactly is it? This is one of these questions that I've been bombarded with clients. A lot of my annuity clients, a lot of my primary annuity clients have been asking me, Derek, what is a secondary market annuity? What's all the hype? So, at first, I have 10, 20 people asking me it, but now it's starting to get up to the hundreds of every day. Somebody's asking me more and more about what's a secondary market annuity. Now, this is probably the easiest example because that's how I learn is basically by learning from examples, or at least seeing exactly, reading an example. Pretty much, if you have, somebody might have won a lawsuit, or, they have certain money that's tied up. Now, what happens is this sort of money that is tied up, when I say tied up, meaning they cannot access their money until a certain amount of time elapses, like a lawsuit that might be coming due to you in about 10 years, or something like you have an annuity, you have a certain 401k account or an IRA account, and you want to basically touch your money, and you have a financial hardship and you want to basically have your cash now. So you've all seen those J.G. Wentworth commercials say, I need an annuity, my cash now, all that stuff, and the nice little song and the dance. Essentially what they do is, if we take an example of like $100,000, and let's say somebody won a lawsuit and they're basically have their money tied up for 10 years, and let's say it's 100,000, somebody like a J.G. Wentworth or these other structured settlement companies will go to them and they say, hey, listen, I understand that you have this financial hardship. We're a very large institution. How about we have a contractual agreement that you surrender your payments that would have been going to you, whether that's a constant annuity payment, from somebody that won the lottery, that they chose the annuity option and they're receiving payments, but they just want to have a lump sum of cash because for whatever reason they need that cash right now. They want that lump sum. So what happens is those J.G. Wentworths of the world, the structured settlement companies, they give them an offer and they say, hey, listen, we'll give you cash. So let's say in that example, we'll give you $60,000 if in 10 years we'll get ownership rights to your $100,000 that was supposed to be paid out to you. So in both situations, both the client and the company win, because the company is large enough that they could actually make that offer, and the client's happy because now they have $60,000 of liquid cash that they could play around with. And that's just an example. So that's what's known as a structured settlement. Now, with those J.G. Wentworths, with those companies, what they do is they take those, because they don't want to have those sorts of contracts on their books. So what they do is they sell it on a secondary market. So that's what's known as a secondary market annuity. Let me just kind of pull up. I have this little website right over here on your screen, and it's called pensionblackbook.com. Now, I'm the owner of RetireSharp.com and Afasi Financial Group, so this is kind of my subsidiary site for people that are interested in the secondary market annuities and in more complex, rollover strategies for their, the 401ks, or they want to have a self-pension plan, kind of like annuity stream come to them. So I actually designed an entire website built around the secondary market annuities and kind of how you can obtain it. So basically, going back to the secondary market annuity situation, why is that important for you? Well, the thing is, after those contracts are already bought over by the structured settlement companies, they now go on the secondary market. So these are fixed products. These are fixed strategies. So you have immediate annuities, indexed annuities, and fixed annuities. So rather than buying one of those, obtaining one of those products on a primary market, where you might be able to get, say, 2-3% of actual fixed income, because it's deemed, because it's a secondary market, they actually give higher contractual guarantees off of those settlements. So that would be the main reason why you'd want to utilize it, why you want to purchase a secondary market annuity, is saying, okay, yes, I understand that it's basically a contractual agreement. It's not set up specifically to my situation, but I could actually now buy over those contracts and become the new beneficiary as if you are now the recipient of the old contract. So I really hope that kind of talking about that makes a little bit of sense. So you could purchase the annuity contracts at a very large discount and obtain up to 4 times the benefits of a typical primary market annuity. So example, if you're a senior, and there's 2 different ways that you could do it. And actually, let me just pull up my digital notepad real quick for you. I know that this usually helps out some people understand these things. So let's say that you are interested in a secondary market annuity. You could have up to 4 times the benefits of a, 4 times the guarantee, 4 times the contractual guarantee of a typical primary market annuity, because now you are the recipient of the old annuitant's contract. So I really hope that doesn't kind of confuse you, but there's 2 sorts of people. You could have it with, and we'll go over the example of the senior, of the retiree. Oh my gosh, the digital notepad is not being cooperative right now. Senior/retiree. So just kind of bear with me on this. It looks extremely sloppy, and I apologize for that, guys. But let's say if you have qualified funds, which is like your typical IRA, 401k accounts, and let's say you're age 55. Now, if you're age 55, with my previous videos, I showed you that if you have qualified accounts, you can't touch this money until age 59 and a half. You have something known as a 59 and a half rule. So whenever you take over these new contracts, because it's known as a qualified account, so you're basically purchasing over accounts. So let's say you had $100,000 into an old IRA, and now you want to purchase a secondary market annuity of a fixed account for $100,000. The benefits of this is, with a typical annuity, yes, you could have it in there, and let's say if it was a 10-year annuity, just a random 10-year fixed annuity, maybe you might be able to receive 2% interest gain every year. As opposed to now, so you could do that on the primary market, and that's known as a fixed annuity, and that's one of the things that I deal with very heavily throughout my company. But for the people that want to basically bring on a little bit extra risk and kind of take over these existing contracts, you could have, because the original annuity was already purchased at a discount, they allow you to have up to 4 times. So you could actually have something with that same type of contract that has 6% benefit. So let's say you take your $100,000 in your IRA account and you roll it over into a secondary market annuity, which is a qualified with qualified. At the end of the 10 years, it would be as if you had 6% on 6% on 6% on 6% on 6%, all the way up to 10 years. So you would be having all those gains as opposed to a 10-year annuity, fixed annuity, on the primary market, which would only be 2% on 2% on 2% on 2%. So the thing is, you have to basically play by the rules of basically the contract, but it works out in a more, in a greater benefit, because this is traded on the secondary market. Now, this is one of the things, because I deal with a lot of different celebrity clients. I have football players. I'm actually based over in Tampa, Florida, so I have some WWF wrestlers. I have football players. I have professional poker players as clients. What happens is you have these younger individuals that are making millions and millions of dollars. And typically with the annuities, because I have a very safe mindset. That's what that's how I invest myself. And I have a very safe mindset with making sure that individuals do not lose their money. Basically, they want to understand that whatever they're investing in is, contractually guaranteed. So with a typical annuity, if you had non-qualified funds, now this basically means anything in like the form of cash, anything that's not qualified through the IRS. And Jesus, this is really, really bad handwriting, but just kind of bear with me on this. Anything that's non-qualified, and even say if somebody had $200,000 of money that they wanted to invest or at least roll over into an annuity, they still have a 59 and a half rule. even though it's not qualified, it's still a 59.5 rule because that's how the IRS deems an annuity. Now with these contracts, and what I do with some of the the younger, more successful individuals that want to start taking income payments, or they want to at least leverage the form of annuities, is I offer them the secondary market annuities. Because let's say if somebody's 30 years old and they're making substantial amount of money and they want to at least take an income stream off of it, secondary market annuities, they follow the SPIAs, meaning the single premium immediate annuities. You could take it as a fixed, meaning a fixed interest rate, or you could take it as a fixed index. So if they're calling up my company and at that point in time, I'm finding them the best possible the best possible situation, and they say $200,000 and I want this money to come out to me as a salary, but they were 30 years old. If I go off of a primary market annuity, I'm not able to offer them really anything. Or I could say, okay, $200,000, you could roll that over, and then after age 59.5, we're going to turn that money on. So what happens is I usually lead people away from that, away from the primary market annuities. But I tell them, I give them now the option of the secondary market annuities of saying, hey, listen, you have the $200,000. If you want to turn on income, within the next couple of years, we could actually do this, because what you're essentially doing is, even though you're 30 years old, you're buying over a secondary market annuity, basically an existing annuity contract based off of somebody else's age, and that's why you are able to now have income that happens for a period certain. So and what we do is we leverage I leverage laddering strategies off of secondary market annuities to allow them to obtain that income all the way up until age 60, and then obviously they have other assets with me as well, and then I could then utilize those qualified funds or those old previous annuities, the primary annuities, to then turn on income at that date. But from age 30 to age 60, I try to at least make sure that they have income coming in. So that's a very, very powerful way that a lot of the younger individuals, the ones that don't want to wait till age 60, could leverage these secondary market annuities as well. Now, what I love to do is provide my clients with the best possible options for income planning. So that could be retirement planning, meaning, say if somebody's, age 40 or above, you could utilize these sorts of secondary market annuities, or just regular income planning. Say it doesn't matter. It's not age specific at that standpoint, because you're actually, you're taking over contracts, you're taking over discounted structure settlements to then act as the beneficiary, and it goes through all legal court systems and different things like that to make sure that the contracts are valid, and to make sure that you are secure, that your contracts are as safe and secure as possible. So I leverage a broker. I actually leverage one of the best brokers in the entire nation for secondary market annuities. So it's not a one-size-fits-all one-size-fits-all plan. It's not like I'm company specific, but the companies that are basically offering this, you have the MetLifes, you have the Prudentials, you have these A+ rated insurance carriers to make sure that yes, everything is backed by safety, and those are the annuity contracts that you will be taking over are from those top rated companies. So basically what I advise you to do is give my 1-800 number a call right now, because my company recently teamed up with the best secondary market annuity broker in the nation. And if you're interested and you want to know more about these and how you could obtain one for yourself, or you just want to know the ins and outs about these products and whether that is some food for thought, you should give me a call. I'm based over in Tampa, and I understand that you want to have that one-on-one personal service. So I utilize the different personalized video sessions. I utilize the actual strategies where you could be in completely in different states and still leverage the services of my company, and to make sure that you are basically being taken care of the correct way. So I really hope that this video helps you out in some way. I have many other videos out there on the primary market annuities, and I do love that is my bread and butter. That is what I like utilizing. But if you are younger and you kind of want to have those higher guarantees and still eliminate a lot of the risk that's associated with risky investments and things like that. These are income producing vehicles, and that's what I've really specialized on, was the income side of it. Give our 1-800 number a call. It's 1-800-566-1002. It's going to be on the screen right now, and also there's going to be a link directly to this website, and it will take you directly to the secondary market annuities, the little platform that I have with some other videos. And you'll be dealing with me only with this company. I have other representatives that work for me, and because of how specific, how structured everything has to be with these plans, I'm actually the only one in my company that actually deals with the secondary market annuities. So if you give us a call, and you will be dealing with me personally. I really hope that this video has helped you out in some way, helped understand a little bit better with secondary market annuities. But I'm definitely here to help you out, and to try to at least obtain your business, and really bend over backwards for you to make sure that you are as comfortable as possible, and you can leverage these products, because they are excellent products when done the correct way. But you do not want to go to a fly-by-night company. You want to make sure that you're dealing with a specialist, and please just give our company a call, and you will be dealing with me. Once again, my name is Derek Afasi. I want to thank you very much for watching this video, and please be on the lookout for some of my other videos. Thank you.